Hi there, welcome to Kneppy Invest. Yesterday afternoon on March 24, 2025, as I was going through the best and worst performing companies on the ASX, I saw that Regal Partners had a pretty bad day. Share price down about 14%, and that did trigger a little bit of intrigue in my mind. So I did just the smallest amount of research, and I did see in Capital Brief that the share price of Regal Partners was down because of something happening with Opthea. And then I just moved on to something else. It didn't really intrigue me enough because I don't follow either company all that closely. And then I moved on, didn't really think about Regal Partners or Opthea until I saw a few of your comments. So thank you to those who left a comment about Opthea on my or in the comment section of my video yesterday. And your comments were enough to have me intrigued. So I went to the announcement about phase 3 trial results for Opthea, and the announcement absolutely blew me away. Now, I can tell you what Opthea is doing, but it might not matter because they may not be a future of this company, even though the valuation is about, well, current valuation is about $1 billion. They do something with wet A&D, something to do with site. Anyway, so let's have a look at this particular announcement that I'm just stunned about. This announcement absolutely stuns me. Not that the phase 3 trial results were negative, but something else. Okay, so the first part of right at the top, Coast phase 3 trial failed to meet primary endpoint of mean change in BCVA from baseline to week 52. Who cares? It's the next bit just below that. Opthea, considering impact of negative trial results under its Development Funding Agreement, or DFA, and on the company as a going concern. What are they talking about here? So because they did not receive positive phase 3 trials, the company is in question. The company has something like over $100 million of cash. The company has a valuation of $1 billion. Is a company so dependent on these results that they may no longer exist because it's negative? That astonished me. And then, yeah, it gets even worse. Yes, so I was intrigued enough to go further down. Don't really care about the results. I'll be honest with you. It's about the DFA. And we do see here, they do mention the DFA. Okay, we're talking about a determination of the DFA, which is sort of like a funding agreement. So they got some money from these, I don't know, private equity or whatever. But for some reason, they agreed. And hopefully you'll be stunned by what you read right now or hear right now. Termination can be triggered by a range of events, including, among other things, inability to Opthea to fund development costs, failure by Opthea to continue to use commercially reasonable efforts to develop this drug, Opthea's insolvency, or disagreement with the DFA investors. Each termination trigger has a corresponding potential repayment amount of $0, $229.5 million, $255 million, $467.5 million, or $680 million US dollars. Okay, so right now, Opthea's management and board of directors are in discussions with the DVA investors. So things may not go smoothly. They may be okay in the end, but they may not go smoothly because I would almost guarantee you the DFA investors probably were I wouldn't say hoping, because hoping is not a good investment strategy, but they're probably thinking with high confidence that these phase 3 trial results were going to be positive. Hence, they had confidence in this company. So I actually went to the notes of their most recent annual report just to see what else we can see in here. And in the notes section, the going concern section, again, why the going concern section of a company's financial statements is really important. And in this particular, and I would actually say, and this is just me guessing, the vast majority of investors don't look at notes of the financial statements. They just ignore it. And in my opinion, some of the most important parts of financial statements are found in the notes, including the going concern. So in the going concern, there's this really interesting paragraph here. In certain instances which may result upon the termination of the DFA, the group will be obligated to pay the DFA investors several multiples of the amounts paid to the group under the financing agreement. I'll just repeat that. Several multiples of the amount paid to the group under the financing agreement. That is why this amount, $680 million US dollars, is so high because it's multiple of the original financing, which blows my mind. So obviously, the company put everything into these phase 3 results. And because they came negative, the company is now under significant threat. And that is why they mentioned right at the top and on the company as a going concern. So I'll be honest with you, what they've done, management have done here to get this funding, and I wouldn't say the hoops they had to go through, but the conditions they put in that multiple times, the original funding, extraordinary. They either were really arrogant, extremely arrogant, maybe overconfident about the potential phase 3 trial results. And it really emphasizes why story stocks can be a big problem. This company had a market cap of $1 billion, which means there was already a lot of promise already priced into the company. And possibly right now, the valuation of this company is zero just because of these results. And this is another reason why I prefer to wait to see results of phase 3 trials. And yeah, this is a great example, a great illustration of why I personally prefer to wait for phase 3 trials before I even think about buying into companies. Well, it's not absolutely true. I will buy into a few companies. Anyway, usually a very small amount. Anyway, so there's no point looking at the chart. Although if you do have a look at the chart for Opthea, you notice one really interesting thing. In fact, you notice quite a few interesting things about Opthea. You notice how volatile share price has been. In fact, the share price almost halved from the start of February. And look how much the share price had dropped over the past few weeks. Now, the other thing to know, so this could be loose lips, but I think the main reason why the share price was dropping like this was if you go to Shortman and look at the shorts on Opthea, there was a massive increase in shorts, a huge increase in shorts. And this was also a sign, maybe not a sign, but a signal from the market that maybe the results were not going to be good. Yeah, look at the massive increase in shorts over the last few weeks, from 1% to 4.5%. So a lot of shorters saw potential that these results would be negative. So that's interesting in itself. And I think that's the reason why the share price had absolutely collapsed before those results were released. Not necessarily loose lips, but I think that's the reason. Now, the share price in 2019, I think it was 2019. Yeah, there we go. If you go back to 2019, look what the share price did back then. That was on phase 2 results. So they were successful. It still took 5 years from phase 2 to phase 3. That's another reason why I like to wait, because you can see the share price since then actually had gone down. That probably did a lot of capital raisings, that sort of thing. So another reason why I like to wait, prefer to wait to phase 3 trial results. Anyway, so why did Regal Partners share price drop 14% or 15%? So let's have a look at let's have a look at Opthea, OPT. OPT. This is via FinChat. And have a look at ownership. Have a look at holders. And who is at the top of the holders? It is Regal Partners. Own 32.9% of Opthea. And in fact, if you just scroll over, Opthea is 11.5% of Regal Partners' portfolio. I think that's what that means. I'm assuming that's what that means. And that is the reason why the share price of Regal Partners fell 14 or 15%, because Opthea was a very big portion of Regal Partners' portfolio. And in fact, interesting enough, if you compare Regal Partners' chart over the past month, since the share price of Opthea started absolutely collapsing, you'll notice there's a bit of a correlation there. And I didn't really understand this correlation until, I noticed or discovered, thanks to you, there was a relationship between Regal Partners and Opthea. Anyway, that's all I have for today's video, looking at why Opthea, well, not why Opthea has dropped because the share price is not trading. There is a chance we'll never see Opthea shares traded again. There is a chance. But that's the reason why Regal Partners' share price dropped. And probably more important, the problems with story stocks, particularly with companies who have a binary outcome. So Opthea would fit into that binary outcome, positive, negative. Share price might drop a lot or rise a lot on the results. and why I prefer to wait for phase 3 trial results. That's when I may make a move. In fact, if Opthea had positive phase 3 trial results, possibly I might have taken a trading position. Just don't know. Anyway, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.